And anything else that's on your mind regarding your personal finances. Stay tuned.
Information presented on this program is believed to be factual and up to date.
When did you
but
do
we do
that?
not guarantee its
Years ago.
accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but is limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Certified Advisory Corp is registered as an investment advisor with the SEC and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.
Good morning. Welcome to On the Money right here on WDBO 107.3 FM and AM 580. You can call in with your questions right now. 844-580-WDBO. 844-580-WDBO to get your questions answered. For the experts on the money, for more than 25 years, the professionals at Certified Financial Group have been answering questions for listeners every week on WDBO's On the Money. And they've become Central Florida's most listened to financial call-in program. And it's the only call-in program where all the hosts are certified financial planner and professionals. They're one of the oldest and largest independent financial firms right here in Orlando. And combined, they have more than 300 years of service. This morning, you have the Oracle of Orlando, Joe Burt and Nancy Hecht. You two, what kind of calls are we taking this morning here and at your offices?
Good morning, Laurel. We are here, as we have been for many, many, many years, with our WDBO listeners, taking questions that you might have regarding your personal finances, things about your IRA, about a 401k, things you might be thinking about as we enter the new year, decisions that you're trying to make about an insurance policy, maybe an annuity that you're looking at, what that's all about. What should you be doing with your money? And our job as certified financial planners is providing financial advice and investment advice for a fee. We do that Monday through Friday. But on Saturday morning, Nancy and I are here absolutely free. So if you have any questions regarding your personal finances, we'd love to talk with you. We are here taking your calls, and we also have in our office this morning Chris Toadvine, who's taking calls off the air. If you have any detailed questions that you may want to get into, he'd be glad to take your call as well. So you can reach him at 407-869-9800 or 1-800-EXECUTE as if you're executing a legal document. But why don't you call us? Because the lines are absolutely wide open, and we'd love to talk to you in the new year. So pick up the phone and once again dial these numbers.
844-580-9326. Again, that number, open lines right now, 844-580-9326. So this morning, what are we talking about this morning? New year, new investments, new financial plans, new money goals.
Exactly. Yeah, there's three things that I've picked out to discuss this morning that I think are very important. The first one is to make sure that you have the right mix of stocks and bonds, depending on what your risk and asset tolerance is. We've gone through another year where the markets ended up in positive ground.
Hooray, hooray.
Net of what happened in March,
Yep.
Most people made up all of the dip. And what we saw from fourth quarter last year and what we did for our clients in January was a lot of rebalancing because the equity portion had gotten to be too large. And it's important to know what your risk tolerance is and to make sure that you keep things in balance. And especially if it's a qualified plan, an IRA, 401k, 403b, if you have to take some gains off the table and reallocate into income-producing funds, it's not a taxable event, so you don't have to be concerned about that. The second thing is to confirm your beneficiaries. There's always life changes. Somebody may have gotten married, somebody may have gotten divorced, somebody sadly may have passed away. It may have not necessarily been the account holder, but it may have been the beneficiary.
Right.
So it's always important to look at all of your accounts and make sure that your beneficiaries are those that you wish. And something that a lot of people neglect is looking at your bank accounts, checking, savings, and money market. You can always add on the beneficiary designation in trust for transfer on death, whatever your bank acknowledges, and then you can avoid probate on those assets also.
While you're on that, the beneficiaries, as we've said time and time again, whatever you have on that beneficiary form takes precedence over what your will might say or what a trust might say. And a lot of people say, well, I got it all handled through my will or my trust. It's what your beneficiary form says, because that's the legal document that controls. So as Nancy said, be sure that you take a look at your beneficiary designations and keep them current.
Well, and it prevents you from paying probate, which in state of Florida starts at 6%, and it keeps your affairs private.
Yep. Mm-hmm.
So if they pass by beneficiary designation. And the third thing is to protect your loved ones. I mean, health has been a huge concern for a lot of people this year. So it's a good time to reevaluate your life insurance. Do you have the appropriate amount? Do you have the appropriate type? Again, who are the beneficiary designations stated on those? What do you have through your employer versus what you have privately?
Right.
You can coordinate those. Right. So these are 3 points that I think are important that everybody look at the beginning of the year.
And talking about life insurance, there's these, I'm sure you've seen them, Nancy, that there's a lot of these promotions about the government's going to come along and take your money, confiscate your IRA, your 401k. They want to offer you a book, offer you the remedy, and the answer is to put it in a life insurance policy. Mm-hmm. Well, that's the craziest thing I've ever heard. But it's a great way to sell life insurance. To scare people, number one. And number two, to convince you that you ought to take all your money, pay all the taxes that are due on the IRA or the 401k. So you're going to, depending on the size of your account, you're going to lose up to 35, 36% of whatever you have. You put it in a life insurance policy, and so you're starting from the whole right from the begin with. I hate these promotions or these ideas, these ads that sell fear.
Yeah. Yeah, I mean, I totally agree with that. And to me, life insurance is for protection.
Right.
So mixing it with a quote-unquote investment or having it be, an indexed something or other or, the 20 million points to points. If you're buying protection, you buy protection.
Exactly.
So I'm a big fan of 20 or 30-year term if you can qualify for it.
So be on the lookout for those promotions, those ads, those fear things, because at the end of the line, if you read through everything, the bottom line is buy an insurance policy. There is a place for life insurance, but it certainly isn't combined with your investments. So that's our recommendation for 2020. I see we've got a call here, Laurel.
Yeah, we've got George who's got a question about those stimulus checks coming into everybody's bank account. What's going on, George?
Good morning, George.
Good morning, George. Happy New Year.
Same to you. Why is the government, I guess, giving the people of this country that are suffering and going through all this to make that $2,000 check?
Why are they not doing that?
Why are they not agreeing with the president to give them the people $2,000 instead of $600?
Well, George, I don't know that we totally have enough time to go through that, but
Well, there's obviously the House passed it and the Senate isn't buying it because the bill stinks because of all the stuff that's packed into it. Republicans are taking a firm stand about enough is enough, and just using helicopter money is not necessarily the right thing to do. It should be targeted. It should be targeted to those people that need it, not just give everybody a check. And there was an article, I think it was in the Wall Street Journal or maybe the USA Today this weekend, where it says that a lot of these people that are getting these checks aren't going to spend it. They're saving it because, in fact, Nancy, you've probably seen the articles as well of how much better people's savings have become in the pandemic.
Yes. And I agree. And I think, George, this is a big part of the problem. First of all, the stimulus bill should have been separate from everything else and targeting it to people that need it. My mother is a Social Security recipient. Why does she need a stimulus check? I mean, it's just completely ridiculous. I mean, she passed it on to my daughter, which was really nice. But that the bulk of people aren't doing that. So that's why it hasn't passed, George, because they want it to be straight stimulus and to the people that it should go to and separate it out from the gender studies money going to Uganda.
And if you look at the size of the bill, George, it was layered with all kinds of stuff. If you do any reading on the political side, it's loaded with garbage. And so the Republican Senate has drawn a line in the sand. People disagree with it, but they said enough is enough, and they're bucking the president. They're bucking the Democrat House. But this is what they feel needs to be done. And once again, just throwing money out the window to everybody that could possibly need it is not a good use of our dollars. It's got to be targeted. It's got to go to those people that have lost their jobs, the people are on an unemployment, but not just to everybody who's, of course, there's some income thresholds, $75,000. But nevertheless, a lot of that money is not needed by a lot of people. So
there was a lot that went to inmates. I mean, aren't most of their needs taken care of by
I would think so, yes, by
prison
you and me.
system? Yeah.
Yes. Well, thanks for the call, George, as always, and Happy New Year to you.
Happy New Year.
Yeah, Happy New Year.
And if you've got a call or a question like George and you want to call in, just call 844-580-9326. Again, open lines, 844-580-9326.
And we've got a couple of topics here. What's your next topic there, Nancy?
Okay, so one question that I received recently was, if I have a chunk of money to invest, should I invest it all at once or spread it out over time? So
in other words, take that cash and just dump it in and just don't look back, right?
one of the first things I learned when I started in 1983
Oh.
was the dollar cost averaging.
Uh-huh.
And that's taking regular amounts of money and investing it over regular periods of time. So what that does is, first of all, gets you in the habit of saving and investing regularly. And second of all, it allows you to invest the dollars potentially on some dips. If we see a day where the markets are red and you have a chunk of money out of your whole pot that you can invest, that may be nice, but that may not be the most red day or the only red day of the year.
Mm-hmm.
So dollar cost averaging, regular amounts of money over regular periods of time. I'm not a fan of investing the whole chunk at once.
And that's exactly what you do when you're putting money in your 401k, your 403b,
Right.
or 457. It's coming out regardless of what the market's doing. On a systematic, disciplined approach, you're adding to your account. Now, that being said, if the market takes off like a rocket ship, then you look back and say, man, I should have had all my money invested. But conversely, if you dollar cost average in, you probably sleep a little bit better at night, at least in the short term.
Right, right.
Yep.
And another thing to think about is reinvesting. So when the markets are down and you're reinvesting dividends and capital gains, you're buying more shares
Right.
at a cheaper price.
Right.
And when it comes time to retiring and turning on the spigot to pay those dividends and capital gains out, the name of the game is accumulating as many shares as you can.
Exactly. I see we've got another call here, Laurel. What's up?
We do. We've got John from DeLand. John, go ahead with your
Good
question.
morning, John.
Hi, John.
Happy New Year.
Happy New Year to you.
What's up?
My question is, I'm 2 years out from my RM required minimum distributions, and I've got both Roth and traditional. When I hit RMD requirements, if I'll start rolling some of the money now. But if I'm rolling money after age 70, does that rolled money count as part of my RMD, or do I have to kind of do both?
Well, first of all, your Roth isn't subject to an RMD, as I think you know, right?
And when you say roll, do you mean converting money from the traditional to the Roth?
Yes, converting from traditional to Roth.
Okay.
Does that count as part of the RMD requirement?
Well, first of all, I'm sure you know that the rules have been changed about the RMD to age 72, right? It's no longer
Right.
It's no longer 70 and a half. And what you're saying is that before the RMD kicks in at age 72, what you're looking at is converting some of your existing taxable accounts, your 401k or IRA, into Roths before that time comes. You're saying, can you do that, and does that count? Well, the answer is it does not count. All you're doing is reducing the amount that will be subject to the RMDs when that time comes.
Right, but when I hit the RMD requirement,
He's saying at 72,
Right. Yeah,
if
go
he
ahead.
wants to convert, say, $25,000 from his traditional to a Roth, will that count as his required minimum distribution? So he's taking the money out
Correct.
of the traditional and moving it into the Roth.
Right.
On the surface, you would want to say yes, and you have to remember that the dollars going into the Roth account have to stay there for at least 5 years to be able to come out tax-free. I need to read the Roth conversion rules and see if they do include or are applicable to RMD. So, John, if you want to shoot me an email, Nancy, Nancy, at financialgroup.com. I'll read the Roth conversion rules just to make sure that we're dotting the I's and crossing the T's.
I think you've got a problem doing a direct conversion on that, John. It's my
Okay.
gut tells me, as my
It's a
recollection
good question,
Yes.
but yeah, it's worth a little bit of research.
Appreciate the call.
It's a little in the weeds there.
Yeah. Appreciate the call. Happy New Year to you.
Thank you, John.
And like John, that leaves a line open, 844-580-WDBO, 844-580-WDBO. We are going to take a quick commercial break, but we are here answering your calls about your money. It's a new year. You've got new investments, new financial goals. Make sure that you get all that done right. Give us a call right now, 844-580-9326 with the Certified Financial Group. It's on the money. We're planning tomorrow. Today with the Certified Financial Group.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
As Nancy said, we're glad to work with you. You can find us on the website, financialgroup.com. That's financialgroup.com. Give us a call. We offer a complimentary client consultation. We'd be glad to work with you.
Yeah, Nick, if you want to give us a call next week, the phone number is 407-869-9800.
All right, I really appreciate it. You guys have a great show too. I got to tell you.
Thank you.
Thank
I
you
listen
so
to
much.
you guys every weekend, and it's just it's incredible that you guys you made the statement this morning that it's not an hour-long pitch about what it is you do. You actually take phone calls, and I think everybody in the greater Orlando area really appreciates it.
Well, Nick,
you guys do a
the
great
check's in the mail, Nick. We appreciate it.
Thank you so much, Nick.
We appreciate the
All right.
kind words. Thank you.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
Whether you want to save for retirement, leave a legacy for your family, or simply gain financial peace of mind, you can find your Central Florida planner at Certified Financial Group, your local CFP pros, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
Listen to Financial Call and Show, brought to you by Certified Financial Group in Altamont Springs. It's the only show hosted exclusively by certified financial planner professionals. Monday through Friday, their CFPs provide financial planning and investment advice for a fee. But on Saturdays, the advice is absolutely free and has been for more than 30 years for their WDBO listeners. If you have a financial question you want answered by real fiduciaries, the lines are wide open. Call 844-580-WDBO. That's 844-580-WDBO. And enjoy the show.
Good morning. Welcome to On the Money right here on WDBO. And if you've got questions, we've got answers. This is On the Money, and there's my music. I was going to say I had some music coming. I don't know where it was. There it is. Now, listen, if you have a little bit more of an in-depth question about your money, is it something you want to invest or maybe Roth IRA questions, you can call off air right now. They're taking your calls at 407-869-9800. You can go ahead and call them right now. You can go to financialgroup.com, or they've got Facebooks. Your Certified Financial Group Facebook is facebook.com Certified Financial Group, or On the Money, facebook.com/onthemoneyfl, or of course we've got open lines, 844-580-9326. Get your calls in right now. Get your money questions answered. 844-580-9326. And your hosts, Joe Burt and Nancy Hecht. And we had a caller last segment, John, who had some questions for you. You've got an answer for John, I hear.
Yes, John, if you're still listening, we did a little bit of looking while we were on the break. And the money above your required minimum distribution amount can be converted to Roth, but the RMD amount does not count under Roth conversion. So what you can do is take your RMD and then set yourself up for maybe a smaller RMD the following year by also doing a conversion with some additional dollars.
But you want to be careful on those conversions, John. It sounds great until you actually do the math. Remember that you have to pay taxes on that, and the only real reason it makes sense is if you pay the taxes out of other funds and roll over that entire amount that you're taking out of the IRA. In other words, if you're taking $10,000 out of the IRA, you want to have $10,000 going into the Roth, not $10,000 minus the taxes, because you're starting from a hole right to begin with, and you never catch up. So a lot of people don't know about that, and they end up think it's a good idea, but then when they look back, they say this wasn't such a great idea because I really didn't know what I was doing. And I see we have another call here, Laurel.
Yes, we've got Paul from Apopka. What's going on, Paul?
Hello,
Morning,
Paul.
Paul.
What's up?
Hi, I have a couple of quick questions for you. I had a kind of a second opinion done on our investments, and I've had an investment advisor, the same lady, for, probably 10 years, and mostly mutual funds. And we don't make anything on it. I might as well put it in the bank and get that, almost 0% because that's about what we make. But I had somebody have a second look at it, and he said, you're paying like 6 or 7% fees. I said, no. Every time I meet with her, I ask her that question because I do listen to Clark Howard, and she says, no, you're at 1% or a little below 1%, a little over, but no more than that. And then he brought into the equation about the hidden fees and the rider fees. Sometimes in the rider fees, he says you actually almost pay double. So I was wondering.
I think what you're
could you
talking
enlighten
about
me a
there,
little bit on that?
it sounds like your money is in an annuity when you said rider. We're going to get back to you at the bottom of the hour here, Paul. Hang on, there's a lot of stuff to unpack there, and we want to talk to you. So hang on.
I have some questions.
Yeah, Paul, you just hang on for us for a quick commercial break. Bottom of the hour news here. If you've got a question like Paul, we've got open lines. Give us a call right now, 844-580-9326, to get all of your money questions answered. 844-580-9326. This is On the Money on WDBO.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
Let's get to Gary in Orlando, who has been waiting patiently. Gary, go ahead. You're
Hello,
on the
Gary.
Certified Financial Group.
Good morning.
Hey guys, how you doing this morning?
Good. What's up?
I've got a fairly succinct question I need to have answered. My wife and I are both in our early 70s, both retired. We don't have an income problem, but we're in the process of looking to sell our residence, which would generate a fairly large tax gain. Can we use loss carry forward on some bad securities to offset that?
First of all, how big is the gain?
Six figure.
How big is six figure? First of all, have you lived in the house 2 of the last 5 years?
Yes.
Is the gain, now I'm talking about the difference between what you paid for plus your improvements, bigger than $500,000?
No.
You're okay. You don't have any taxes to pay. You can walk away tax-free.
My question is, we've got a loss carry forward from some bad security
Right.
decisions
Right.
that we're down the road.
Yep.
Can we use that to offset it?
You don't have to offset it because you're not going to have any taxes to pay.
You can use
You're
that
not
to
gonna have
offset.
any gain on that sale?
That's correct. If
You
your
can
gain
use-
is less than $500,000,
You're right, Joe.
you will have
but
no.
he can use it on other
Right.
gains.
You can use it on other gains. Yeah, you can use it on other investment gains that you might have.
Or, if you don't have anything to offset it, then you're allowed to write off $3,000 a year.
Right.
Yeah, but if you don't have more than $500,000 in gain from the sale of your home, you don't have a capital gain obligation.
Good news, Gary.
Okay, you answered the question. I appreciate it.
Yeah,
Thank
you're
you.
quite welcome. So it's $500,000 for folks that are married and $250,000 if you're single. The only caveat is that it has to be your primary residence in 2 of the last 5 years.
Yep.
So it works pretty well. Hopefully they won't change that in any upcoming tax legislation. But we've had a lot of clients take advantage of that as they're downsizing now in their later years and want to move into something smaller. They don't have to pay income taxes. So it's a good deal. We appreciate the call, Gary.
Whether you want to save for retirement, leave a legacy for your family, or simply gain financial peace of mind, you can find your Central Florida planner at Certified Financial Group, your local CFP pros, where we're planning tomorrow, today.
We got a couple of text questions in here at 21232. My IRA went down 30%. Is it time to rebalance from what is not going to rebound? Is it going to convert to a Roth before the taxes go up? Or is it time to convert to a Roth before the taxes go up?
Yes or yes. It really depends on the situation. Rebalance, definitely. And because the account balance has gone down 30%, it might behoove that person to go ahead and do a conversion because they'll pay less in taxes. But again, Joe, what do we say about Roth IRAs at the end of the day?
Well, Roth IRAs aren't for everybody. Sometimes they're oversold, but the fact that your portfolio went down 30%, it's not going to affect your taxes unless you cash out. So I wouldn't necessarily do that. I mean, you don't want to sell what's down. You could do an in-kind transfer and do that. Yeah, you could do an in-kind transfer. And I think everybody's tax situation is unique. We are not big fans of the Roth because of the taxes that you have to pay today. If you're in a tax bracket above 10%, sometimes it doesn't make sense to do that. As we've told our listeners in the past, I've written an article for Kiplinger a while back entitled Roth, a Wolf in Sheep's Clothing. Roth, a Wolf in Sheep's Clothing. You can Google it and find out the pros and cons about Roth conversion. So it is a possibility, not a bad idea, but you need to speak with your certified financial planner and have him or her perhaps give you a little bit more direction.
In most cases, individuals do not have the ability to adequately investigate their investment advisors. More often than not, their advisor is a referral from a friend or perhaps a family acquaintance. Referrals work because they often come from someone you trust. But does that mean that that trust can be transferred to the advisor? CFEX advisors are audited to the industry's best practice standard by expert analysts. That's something an investor can take comfort in. Most individual investors don't have the time or expertise to perform detailed due diligence on investment advisors, and certainly not
580 WDBO, and enjoy the rest of the show.
You are listening to On the Money right here on WDBO 107.3 FM and AM 580. Certified Financial Group here answering your questions. Joe Burt and Nancy Heck do this every day. They help people like you with your investments, with your Roth IRAs. Maybe you're a widower trying to take over finances. Maybe you want to know about wills or beneficiaries. All of those questions can be answered right now. All you got to do is give us a call, 844-580-WDBO. 844-580-9326. We've got open lines, so here's your chance. Just give us a call, get your questions answered. 844-580-9326. Now, Joe, Nancy, I was on your Facebook, again, facebook.com, Certified Financial Group, or facebook.com/onthemoney, and I see a question here that says, do I have the proper choices in my retirement plan for my risk? We'll get to that in a minute, but right now we were talking to Paul about his question about possibly hidden fees.
Yeah, Paul.
Hi, Paul. Are you still here?
Let's get back to your question here. So you went to somebody.
Yes, I'm still here.
Let's summarize where you were. You went to somebody for a second opinion on your investments because you say you haven't been making any money. How long have you had this particular program, Paul?
10 years, he said.
Yeah, close to 10 years.
Very good.
Okay, and is it an investment annuity, a variable annuity, or is it straight mutual fund investing that you have?
It's a variable annuity.
Okay,
In fact,
all
there's
right.
a couple of them.
All right, so that's a whole different animal. So when you were told by the person giving you a second opinion that you're paying 6%, what they're referring to is surrender charges that you would pay if you were to surrender the policy within probably anywhere from 5, 10 to 17-year period of time. And there are a lot more internal expenses associated with variable annuity versus going straight to mutual funds. Is it a retirement account by any chance?
No, it's not. No, ma'am, it's not.
Okay.
So what you have there, Paul, you have mutual funds that are wrapped in an annuity, and these are very popular. They're sold by many, many people. And what you have in that, you've got some riders, as you mentioned, and those riders are what's causing the extra fees. And probably what you have is what's called a lifetime income rider, a guaranteed death benefit, perhaps, maybe a nursing home rider. That all those things added up add to the fees. And That's the bad news. The good news for you, Paul, if you're interested, we can do what we call an annuity bailout program for you. We're doing this for our clients, and the reason we're able to do this today is because there are new annuities out there that will allow you to have as good or better product than what you currently have for less cost, and allow you to do what's called a 1035 tax-free exchange. So if you want more information about that, if you have one of those annuities, they're very, very expensive or they're not doing as well, you may want to do what's called, we're saying is an annuity bailout or annuity fix-it program. You can call our office right now and get some information from Chris Toadvine. He's there right now at 407-869-9800, 407-869-9800, or 1-800-EXECUTE. And we'll get back to you with a quote. You can see exactly what it looks like and you make an intelligent decision, which also brings us, you talked about your mutual funds may not be doing as well. Let's talk about the Score My Funds program, Nancy.
Well, 1 second, though. I wanted to
back to Paul.
Yeah, Paul, is your current market value less than what you invested?
Yes.
Okay, so you actually, depending on not if you're still subject to surrender charges, if it's worth less than what you invested, you could walk with no taxes and then just go straight to investments as opposed to having any type of insurance wrapper around it. Again, that would be worth having a look at first to make sure that that is the case and that you would not pay some surrender charges. But one thing that we do is something called Score My Funds, and we have a service that we contract through and a variety of different points that we look at to assess the quality of various different mutual funds. And we're looking at whether the fund is staying on its own style, how it performs compared to the peers. Has there been a huge management change? Any type of thing that would make a fund worth looking at and saying, maybe this isn't the best in its category, maybe it's not the best for your risk tolerance. And it gives us a score, and then we have a really, really sophisticated color coding system that's red, yellow, or green that tells us whether or not a fund is valid to keep into a client's portfolio or watch or dump. But it does look at 17 different points? 11 different points to determine the quality of a mutual fund. And it's a great tool.
So it's absolutely free for our WDBO listeners. If you want information about that, it's very simple. Go to scoremyfunds.com. That's scoremyfunds.com. And it'll tell you what it's all about. And you plug in your tickers. Your tickers are the 5 letters or 3 letters if it's a ETF. So it's for mutual funds as well as exchange-traded funds. And as Nancy said, we will provide you a score. And we will rank your fund against all of its peer classes. So you're comparing apples to apples on 11 different data points, as Nancy said, like manager tenure, expenses, how the fund compares to its peers on a 1, 3, and 5 year basis. How long has the manager been there? How much risk is the manager taking to get the return that you're getting? All very important things. This is more important in buying a fund than how many stars, diamonds, or smiley faces it might have. And we've had some very, very interesting conversations with folks who have sent that stuff in the past couple of weeks since we announced it. And they're really shocked and surprised at what they thought they had was a great fund. When they compare it to their peers, there may be some other opportunities. So once again, if you want more information about that, very simple. Go to scoremyfunds.com, scoremyfunds.com, and it'll tell you exactly what you need.
I think one point that you made that's simple and yet very important is it is an apples to apples comparison. So we're not talking some industry jumbo to try and make you think that what you have is not of quality.
Exactly. Yep.
I mean, as fiduciaries, we have to be straightforward with our clients and our potential clients, and take a look at what you have and explain it to you in plain English and give you a very fair comparison.
So if you have a large cap growth fund, we're going to rank it against all other large cap growth. If it's an international fund, if it's a bond fund, or whatever it might be, we will score it for you and tell you exactly where you stand. So it is absolutely free. Once again, scoremyfunds.com. scoremyfunds.com, and we'd be glad to help you. And I see we got that Facebook question, was it?
Yeah, Yeah, and that might loop in right into this. The Facebook
Sure.
question says, do I have the proper choices in my retirement plan for my risk, and how do I know if they're good funds or not?
Well, and Score My Funds is one tool that we use to look at the quality. And another thing is we have an investment questionnaire that every single client has to fill out. And it looks at all the different attitudes of risk based on time horizon, use of funds, inflation, a variety of different points to get a mix between equities and income. So that plus the Score My Funds tool is what we use to help clients put together a proper mix and quality for their investments.
Yeah, the key is to get the highest rate of return with the least amount of risk. And as the markets have gone up in the last year after we got through the March disaster, everybody's feeling good, as well you should be. But the question is, how much risk are you taking to get those returns? And if, in fact, when the market does its inevitable correction, will you be left holding the bag? So what you want to do is have a portfolio that's put together that will get you the maximum amount of return with the least amount of risk in a highly efficient manner. And that's what we have done for over 30 years, close to over 40 years with Planners, the Certified Financial Group, of building those kinds of portfolios, as Nancy said, for our clients, matching your risk tolerance and time horizon to your own personal needs. So we'd be glad to work with you. You can find out more information about us by going to our website. That's financialgroup.com, financialgroup.com. We have an office in Altamont Springs. We have an outpost as well in South Orlando in the Windermere area. So if you live down in the South Orlando or Lake County area, we'd be glad to meet you there as well. So you can go to our website, financialgroup.com. You make a reservation right there, and I think we've got some workshops
We do.
coming up, Nancy.
We have 2 workshops on the book. The first one is Saturday, January 20th, hosted by Gary Abley from 9 a.m. to 11. This is a virtual workshop, and it's Countdown to Retirement. If you go to our website, as Joe said, financialgroup.com, you can sign up for the workshop, but you have to sign up at least by 5 p.m. the date prior. So that workshop is Saturday, January 20th. And then the next one is Key Elements to a Successful Financial Plan, Saturday, March 13th, also from 9 to 11. This is hosted by Rodney Omby. And this is going to be the first in-person workshop that we're holding.
We hope.
Yes.
We hope.
Assuming construction gods are smiling down upon us, this will be in our new media center as in our offices in Altamont Springs. But if you go to financialgroup.com, look at the workshop tab, you can sign up, and then also you'll be kept abreast of whether something's going to be in person or virtual.
Once again, these are absolutely free. Both Gary and Rodney are both, in addition to being certified financial planner professionals, they're also CPAs. So you got a lot of horsepower there with our firm. As you've heard us say, we have 12 certified financial planners. All of our certified financial planners are also accredited investment fiduciaries. And there's very few combinations. You know, Nancy, I was looking at, because as you know, we're in the mode of recruiting a couple more CFPs to round out our offices. And I was looking at how many combinations certified financial planners, accredited investment fiduciaries out there, and there ain't many.
No.
I didn't realize how few of us, that combination, are out there. So we're honored to have 12 of us, Nancy, I, and 10 other CFP AIFs, as we call them. In addition to being a CFP and AIF, Rodney and Gary are also CPAs. So we have a lot of horsepower in our firm. We'd be glad to work with you. We've been doing financial planning and investment advice here in the Central Florida area for now over 40 years, and we'd be glad to work with you as well. So go to our website. That's financialgroup.com, financialgroup.com.
And that's a big tool to have right here at your fingertips. If you want to call in right now to get your questions answered, you've got retirement questions, you've got investment questions. It's a new year. Maybe you want to handle your money a little bit better this year. You can get your questions answered right now. Just give us a call, 844-580-WDBO. That's 844-580-9326. Open lines here with Certified Financial Group, 844-580-9326. All right, one other Facebook question for you here.
Okay.
Do I really need the emergency savings fund?
Yes. If the past year has shown anybody anything, having an emergency fund, which is cash on hand, money that you have no use for, anything that you have to spend within 18 months, you need to keep in cash. And an emergency fund is what I call toe of the sock kind of money. It's going to sit there. You'll look at the balance. It may aggravate you that you have so much sitting in cash, but When that emergency happens, the AC blows, God forbid you get furloughed, you have to replace your roof, something like that, and you have the cash, you will be extremely happy that you did it. A lot of people like to look at having at least 6 months worth of expenses in an emergency fund. I prefer to look at having 6 months of income in an emergency fund. Why? Because your income is generally more than your expenses. And if you have a little extra in cash reserves, so be it.
There you go. Yeah, because cash is king, particularly when you have that disaster that pops up, because what you don't want to do is put it on a credit card, because that leads to other problems. Or if the only other source of money is taking money out of your IRA or 401k, that's taxable to you and might be subject to a penalty. So to avoid those kinds of disasters, it's your own little insurance policy. It's a great thing to have, and we recommend it for our clients. And I see we're up against a break there, Laurel, and we can take that break and get to our calls right after on the other side.
That's right. If you want to go ahead and get in the commercial break while we've got the time, go ahead and give us a call, 844-580-9326, answering your questions about your funds, your money, your investments. 844-580-9326. After this break, we'll be with JD. This is On the Money and WDBO.
I am Joe Burt with Certified Financial Group. Welcome to our office under construction. I'm about to take you into phase 2, which is under construction. It should be done by the first quarter of next year. We'll start here, and then I'm going to show you where we're currently living. So follow me. Here we are. So you're walking into the reception area. The receptionist desk will be right here. And this wall that you see here will be totally glass as well. So we'll have glass on both sides to bring in all the natural light. So the reception desk will be sitting right here. She'll be facing this way. And right here will be seating area. We'll have seating right here with the bookcase arrangement here. And in these two areas right here and over here are going to be what I call living room style conference rooms. They'll be equipped with the sofas and chairs and television, a comfortable meeting space. Not necessarily a formal conference room, but a comfortable meeting space to meet with clients and talk about what might be on their minds. So once we've entered the reception area, we now come back here, and this will be our new studio where we'll be doing our radio shows and on-demand podcasts. And this would be our conference room, training room, seminar room, enough to accommodate 30 people. Back behind the reception area, we have a coffee bar here, by the way. Be able to serve espresso, cappuccino for our clients. Will be right here, and also to accommodate people coming out of the seminar room. And around here, follow me. And here will be another, I would call a formal conference room with a round table and television. This area here, another formal conference room. Round table television. In this area here will be a large office for what we currently or traditionally call our back office. These are the folks, the ladies right now, who do all the paper processing to get the orders, our clients' paperwork handled and out the door. This area right here, which I have glossed on two sides, be a private room. It's what we call our telephone room. So if clients or our colleagues want some privacy on their cell phone, they can come in here, shut the door, and have their private conversation. So that's right here. So let me show you phase 1. So this is currently where our clients come in, our temporary reception desk right here. This is our temporary break room, if you will, coffee and donuts and coffee machines. And this is our new work area. This is where all my colleagues and I work every day. As you can see, we've upscaled a little bit. So we try to make it comfortable yet workable. So all the planners around the perimeter of the office have their own private offices, and all of our colleagues have their own assistants from their workstations right here. So as you can see, we've done our very best to make this comfortable and state-of-the-art. Yeah, hope to see you in here in the first quarter of next year. Take care.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified
questions that are a little bit more in detail, you can call Chris Toadvine right now off the air. He's taking your questions at 407-869-9800. Again, 407-869-9800. And you can always go to Certified Financial Group's site at financialgroup.com. All right, in our last few minutes here, Joe, Burt, Nancy Hecht, let's talk to JD, who has some questions about withdrawing some money from a fund.
JD.
Hi, JD.
Good morning.
Good morning.
What's
Happy
up?
New Year.
Same to
Happy
you.
New Year. What can we do for you?
I wanted to ask a question about my TSP. When I withdraw some money out of the TSP, can I claim part of that as a capital gain?
No. Nice try.
I'm sorry. I didn't mean to laugh.
It's all ordinary income, just as if it would be coming out of an IRA or 401k.
For people that don't know, TSP is a thrift savings plan. It's for people who work for the government.
Yes.
So, JD, everything that you've earned has been tax deferred throughout the years. So you haven't paid any taxes on it. So as Joe said, just like any other traditional retirement savings plan, 100% ordinary income tax on what you withdraw.
But JD, you sound like my kind of guy. You know, you're thinking about minimizing your taxes as best you can and converting what would be ordinary income coming out of your TSP into capital gains. But unfortunately, as Nancy and I have said, any money that you take out of there will be taxable at ordinary rates. At least under the current law, heaven only knows what might be down the pike. I don't think it's getting any better, but that's what the current law is. How long have you had your TSP, JD?
Maybe 13, 14 years.
13, 14 years. Well, continue to put it in. You know, that's your best way for retirement is to build up that money, putting it in a pre-tax basis, and then allowing it to grow without being taxed. But when it does come out, of course, it is going to be taxed to you. But it grows a lot faster if you don't have to scrape taxes off every year in and year out, as putting money in a 401k or a 457 or IRA is. It's always the best way to accumulate money.
And taking advantage of the thrift savings plan, as Joe said, whole dollars, that means that it's gross money that's going in. It's not net after tax. And the more that you can do to something like that or contribute to a 401k, 403 thrift savings plan, is less you're paying in taxes. It's your pocket or it's the federal government. So make the smart choice.
So to wrap up here, we want to remind our listeners about our service called ScoreMyFunds.com. ScoreMyFunds.com. If you have some mutual funds you want to get some objective scoring on from a fiduciary service, that's what we do. You can call Chris Toadvine right now in our office at 407-869-9800 or 1-800-EXECUTE. If you want more information about Nancy and me and the 10 other certified financial planners at CFG, go to our website. That's financialgroup.com. financialgroup.com. We look forward to seeing you soon. We're also doing virtual meetings, so if you have any interest in that, just let us know. We also have an outpost down the Windermere area for clients down in South Orlando and Lake County.
Thank you for listening to On the Money every Saturday from 9 a.m. to 10 a.m. On the Money by Certified Financial Group here on WDBO.